Alright guys, welcome back to the channel. We're on the verge of collapsing markets, as many of the headlines have been saying now for several weeks. Trump is doing all sorts of things to bring prices down with his tariffs, and it doesn't seem like this is going to come to an end anytime soon. We have the Liberation Day coming up in a day or so's time in the US, where we might get flogged with a whole lot of tariffs, we might not. And that's what the markets are not liking. So what does the data say for April? What is my thoughts, my opinion? I'll leave that towards the end of the video, but we'll go through all of the data initially, and then I'll give you my thoughts later in the video so that we can differentiate between the objective data and my subjective opinion. Hit the like, subscribe to the channel if you haven't already. It's your home of macro cycle analysis. I'm going to be using several tools and indicators in today's video. You can find a link to those in the video description. 7-day free trial with the TIA indicator suite. That goes through things like predictive cycles, forward returns dashboard, and of course, the absolutely fantastic Gann swing indicator. Okay, with that in mind, let's start it off with what the markets are feeling like on the 31st of March. And of course, it's basically been towards the end of March. Now, I'm doing this at the beginning of the video because it's easy to look back on this in several months' time and think, well, in hindsight, we should have seen a low, or we should have seen a top, or anything like that. But it's always the feeling at the time. And I've seen it with the comment section as well. And I have thrown that into a bit of the objective data here. But anyway, this is the feeling at the time. We'll get into the objective stuff in just a second. Q1, Allianz Life Study, 51% of respondents believe they're going to see some sort of big market crash is on the horizon. Obviously, we've seen collapsing markets. Let's look at actual prices now and percentages to the downside. So from the peaks, it's been about 10% for the Dow Jones. For the S&P 500, from the peak we had in February to the low, it's been 10.6%, so slightly more on the S&P 500. And to round out the top three in the US, we'll do the NASDAQ, which put in a top in December of 24, and the low brings it down to 14.66%. Monday that's just open now is almost to that same low. So there is obviously a lot of negative sentiment floating around in the markets. We've seen some of the longest streaks of highest bearishness reading. This is from the II investor sentiment that has to go all the way back to the beginning of this survey in 1987, basically sitting around 58, 59, and even 60% bearishness. Now, I've shown you in many videos where this comes up, and they're usually bearish at the lows or around the lows, and most bullish around the peaks. So let's just go straight into some more data for real estate and, of course, the stock markets as we lead into Q2 of 2025. What are we going to figure out here? Case-Shiller 20-city US home price indices. Now, a lot of these cities, some of the major ones, your biggest ones in the US, are in all-time highs, months from a high, 0, 0, 0, 0, 0, 0. Some of them are roughly 33 months, so they saw their last high back in 2022. But when you look at a percentage here, it's not very far off a new all-time high, negative 0.7, negative 0.3 for Dallas. Where are we at? Phoenix, negative 0.5. And some of the worst ones, well, it's Tampa and San Francisco, negative 5%. But apart from that, it was really only Tampa that was 1% down. So you're still seeing higher prices for real estate. And the theory, we're looking at the 18-year cycle, is that while real estate prices are up, it's unlikely that we'll see an entire market collapse. Looking at the stock markets, I'll leave Bitcoin for just a moment. So the stock markets post-election year for April since 1955, this is one of the best months of the year for the stock markets. Dow Jones, it ranks second, so there's probably only December that's better than April at this point. S&P 500 second, NASDAQ third, and the Russells, we'll leave those. Average 1.9, 1.7, 2.6, so potentially a reversal here, according to the statistics, looking at a post-election year in April since 1950. So coming up to 75 years of data. It's up 12 times. This is for the Dow Jones. S&P 12 times, down 6. So in terms of a percentage, not the greatest there, roughly about 66, 67%. I'd much rather see over 70 or even over 75% of the time. The probabilities would show that you'd get a higher month, in this case for April. So I want to see it over 70% in order for it to be usable. Under 70%, almost towards that coin flip. Okay, so for the April graph here, post-election years, looking at the market performance. Now this looks at it day to day, Almanac Trader. So there seems to be about 6 days. If you're out of the market for 6 days in April, there's about 20 to 21 trading days. So we're talking about this for trying not to miss the good days, right? You can see these levels here with the solid lines. There are your stock markets, the dotted lines. That's the election year. So we're looking at post-election year, 1950, 1921. Solid lines is where we are at. We want to see these dates here. Trading day 1 of April, up. Then down, up, basically choppy. And I'm pointing these ones out because this is where the market gets the most excited. They get excited when there's a day up, and usually in a streak. But once it gets choppy, then people seem to forget about it. So you got that 1 day there coming out of the beginning of the gates. 1 day, April. Okay, so when is the next period? You get to around trading day 6 up to trading day 8. So 6, 7, 8, roughly about 2 days there of nice moves to the upside. Then basically goes into a bit of a choppy mess. Where are the solid lines? You only really get 1 more day here. Day 11 into 12, or on day 12 that is. So far we've got 1, 2, 3, 4 trading days. Gets a bit choppy again. It gets a bit cleaner towards the end here for the black line for the Russell. Not that interested, but mostly for the Dow Jones, NASDAQ, S&P, they're the green lines. You have kind of a couple of days here in 15 through to trading day 17, and then towards the end of the month, roughly around trading day 19 to trading day 20. So we had about 4 here, 5, 6, maybe 7 good trading days for the entire month. So if you miss those trading days, essentially you miss out on the percentages, which you see here on the side. This is the gains for the month. So it could feel like a bit of a crappy month if you're missing out on those particular days. And I bring that up because it's the same thing that would happen for Bitcoin. You're probably only going to get a few good days in the month. And if you miss those, then you're basically holding on for all of the chop, and you wouldn't see the same sort of gains that the month might show. Okay, record rotation out of US stocks. So this one here is just looking at the fund manager survey. This is the times when fund managers have been overweight US equities. That's what this OW is. And generally, it seems to happen quite often, like we see in the markets, they're overweight roughly around the wrong times, and underweight, which is going to be in the negatives here, that's your underweight, roughly around the lows. So let's put this over here. You can see March 2023, that was the banking crisis. We talked about it at length on the channel, talked about why that would probably be a fantastic buying opportunity. If you remember, you recall from back there, great. The reason being is that we'd come out of a 10-month bear market, putting in higher lows. One of the most extreme news events that we had seen through that entire period. We had inflation crisis and rate rise fears, and everyone was talking about recessions here like they are now at these areas. Yet the price didn't go lower. So you had a divergence here between how fearful the entire market was and where the price was. So the smart money was buying up. And this here showed that the fund manager survey, Bank of America, Global Fund Manager Survey, they were underweight, heavily underweight at that low. So this has not turned around yet. So we don't have any confirmation. That's one of the big ones here. There is no confirmation yet of a low. There are only signals, indicators, surveys suggesting that it could be around a low. That's the difficulty at this stage of the market. But I'll add in a little bit of a comment here. I know I would save it till the end. The markets are down 10% from the highs. S&P roughly around 9.6% as of this video right now. And the largest corrections that we've seen along this bull market out of 2022 low are around 10, 11%. The bear market obviously was about 20 odd percent. There's high to low, 27%. And through 2015, which I'll bring up in just a moment, there were some periods there of about 14 to 16%. There it is there, 15.6% from the tops to bottoms in those areas. So just looking at it from a risk reward basis, it's obviously much better here than it was 2 months ago. And to get to that 15% correction from the high, the market would have to drop somewhere to around 52, maybe even go down and test somewhere around the lows there at about 16%. So the current correction from here to the lows, about 7%. So it's not there yet. It might not get there. It might only come out at 5,400. But in terms of the risk reward, that's the comment that I want to make there. That's what we're all looking for when it comes to positioning ourselves for the next leg. So I started with the real estate details here because there hasn't been any collapse yet in the market. I don't think it's too far off, but we haven't got that collapse yet in real estate prices, which I think would send the entire market coming down. Therefore, these sort of corrections are probably reasonable areas for the next or final phase of the bull market into this peak. So there's the fund managers survey. We've seen that they've picked some pretty good lows to be underweight in their portfolios. Hopefully you're doing the opposite here. Hopefully you're not underweight at the best times to be buying. Okay, let's move forward to the forward returns. This is for the Dow Jones. It has the most amount of data. Obviously, S&P 500 and the NASDAQ have been around a lot less time. So we're using the Dow Jones here. And just looking at April, which is the fourth column, it's roughly around 60% of the time green, 40% of the time red. So more often than not is green than red, but huge disclaimer on this. To me, that's not enough. It's pretty close to a coin flip here. It could be red, could be green. What a shitty thing to say in a video, right? Everyone's looking for confirmation. They are looking for certainty. The market doesn't give us certainty, but I'll give you my opinion later in the video. I'm just sharing the actual data with you right now. It says 60% green, 40% in the red. Moving on, the chart now. So for the this is for the Dow Jones actually. The high to the low for the month is at, call it 10%. Now the 50% level, just the data points that we have from the actual chart, the 50% level now is at 38,800. The previous one we were watching for the Dow Jones was up at around 41 to 42. These were the two significant lows that the market had put in before it got to the final top. And at the moment, as of March, basically one more trading day, should it close underneath 41,800, it seems like we would then be looking to test the next levels, somewhere around 37, 38-ish thousand, and then the 50% level comes in at 38,800. In terms of a percentage from top to low, that's about a 14% move. So not out of the ordinary. For the S&P 500, similar sort of thing here. The percentages are a little less. Now the other support and resistance levels that I'm watching are the low 5,500 points, 5,400 points for the previous higher swing low, and then I have to go all the way back to the 50% level and the 100% extension and the yen carry trade low. So some good price cluster coming in there at about 5,150, 5,200 points. The predictive cycles. This one's for the Dow Jones. We have the most amount of data here. Blue line. It's gone up for the beginning of the month. So it's into January, into February. It's come all the way back down here. This is to March, a bounce, and then a correction. Now, what we've seen before, this one here is the 100-year cycle. So looking at 1925, you might ask, why am I looking at that? That's a whole nother discussion, but I'll just mention that it's also the end of a real estate cycle, and I like to look at things that essentially we've seen them happen before and see how the roadmaps are following each other. So there's 100 years there. Looking at where we sit, April still isn't the cleanest on record, but once you get to May, things might clean up from there. What I mean by that is the market activity. You can see through April, a bit of a bounce, but then go sideways for the second half. For May, a bit cleaner there to the upside. Come June, there's still a fair bit of uncertainty there. Now, I can appreciate that not everyone is going to want to look at 100-year cycles. So I'll move on from that. If you are interested and you want to learn more about cycles and how we use these through the years gone by, link in the video description, of course. That is for the TIA indicator suite. I've done that publicly on the channel now for 2.5 years. 2023 was a fantastic year for those cycles. Same deal for 2024. And we did it in advance, not in hindsight. Okay, so that leads me on to a quick look at the sentiment for the S&P 500. Pretty much the sentiment's in the toilet. I don't think I need to go on about this anymore. Fear, fear, fear. You get an extreme fear, then a bounce into fear, barely into neutral, and then dumps back into fear. So lower highs, lower lows. But I guess the good news is it can't go down forever in terms of the sentiment. It basically moves between 0 and 100. Eventually it's going to turn, and we've seen this before as well. So for gold and Bitcoin, quick look at gold here as it's basically been skyrocketing. New all-time highs, 3,136. Now the main comment I'll leave here for gold is that these monthly swings are getting a little extended here. You've got 8 months in a row in a swing to the upside, 1 month correction, and now we've got 4 months in a row to the upside. Doesn't mean it can't keep going, but these moves seem to be getting a little bit overheated, like you could see back in the early 2000s. Similar sort of move into these peaks, 5 months in a row, very small pullback, 3 months in a row, small pullback, couple of big months into that final peak, significant pullback. From that significant pullback, the market went sideways for about 16 months, about just short of a year and a half before it started to move again. And it only started to move again at the end, or basically the peak, a month before, let's say, a month before the S&P 500 peaked. You can see this month that I've got highlighted right here. That's the breakout. That's October 2007. That was the peak of the S&P 500 before the GFC happened. 57% correction, so on and so forth. So September, it broke out, basically the month before the final peak. Now, it also did correct pretty friggin' heavy through the GFC. March 2008, we might not remember, September, October was the Lehman Brothers collapse. Everyone thinks of the GFC basically as that month, but of course it went on for, 18 months total from the correction top to the bottom in March 2009. But essentially everyone just remembers Lehman Brothers collapse, that's the GFC, 1 month there, rest of the market is dead. So from here, March 08, it pretty much went sideways again until 2009, and then the rest is history. So there was still, the point here is there's still 2 significant corrections for gold before the stock market bottomed, and there was a significant correction before the stock market peaked. So let's have a look at where we are now and the runaway train that gold has been. If you've been stuck in Bitcoin, say from 2023, here's a positive one for you. Here's a bit of hopium. 2023, I looked at this just before. The low of gold in October 2023 to the current price, and I say only, is only up 72%. For BTC, the low from October to the current price, you'd still be up 210%. So almost 3 times. 70%, 210, roughly around 3 times. It's still still a much bigger gain on Bitcoin, even if you missed the top, even if you missed the bottom. That's the beauty about BTC compared to Bitcoin, compared to gold, and it's so much easier to trade than gold is. So that's the point I wanted to mention with gold. It is a runaway train. The swings are still up, the lows are still in play. Taking a look at the volume, it is dropping off just a touch here. Next price target's around 3,276, $3,276 is the 100% move there on a shorter term basis. Now for the big one, BTC, and we're currently in our second red month and our second month down. So you got lower highs, lower lows. So 2 months down there. Through this cycle, we've only seen that happen 3 times prior. You've got the 2023 move, couple of months down, it was a little shorter, then a bounce, couple of months down, the big move. And then through this period here, I hesitated because in some exchanges you have 2 lots of 2 months, and in other exchanges it's basically just the 5 months straight down, as you can see there, because this little swing was not put in. It's only $4 higher than the other. So I like to look at this as one big swing down of 5 months. So that's an interesting one because this could be another longer period where we see 3 months correct, but provided the price doesn't go underneath the significant key points here of the previous months, then it's going to hold up. I'll get to that in just a second. We're just looking at timing at the moment. Now, in the previous cycles, there was 2 months down, lower highs, lower lows. But of course, you'll have the people who just look at this and look at it as red months. You got 3 red months down. That's essentially slowed the entire move. Also, through the prior bull market, you had 6 months in a swing to the downside. Forget the green. We're looking at lower highs, lower lows, because that's what the buyers and sellers are doing. They weren't able to break the previous high, and they just kept putting in lower lows. The cycle before that, 2017, only 2 months here, but that was also an inside, lower high, higher low, and you really only had 1 month down here. Again, just 1 month, 1 month, 1 month back at the consolidation, and you got to the peak. So you rarely saw anything more than 1.5 to 2 months in a downtrend for 2017. Going back to 2013, we had a large correction here of 5 months. So kind of similar to 2024, we had the 5 months there. Then the market climbed back. 3 months, maybe we're in something like this right now, and then that final boom. So if I can give you some hopium for the rest of the cycle, even if we were to see April be red, then there's still the possibility that you can see this final boom out, provided it doesn't go below the key support levels. Now, the price levels for Bitcoin, we're looking at the $62,000 range. That's the 50% level of the entire bull market now, because as it stands, Bitcoin is sitting on the 50% level from the August low to the run up into January. That level is 79K. So it looks like it might come back to test that level now. Has not been able to break above the diagonal downtrend. It got rejected at the short-term 50% level. Here it was there that we're watching last week. There at 88,000, 89,000, got rejected, came back, and is underneath the short-term 50% level of just that weekly swing up, which was 82,700. So it's not in the healthiest position as it stands, with some volume coming into the game on those days on the downside. Let's carry on and look at the day counts for the entire cycle. If this is still a bull market, so we're assuming here that it's still a bull market, just like those that are calling for a bear market are assuming that it's in a bear market already, 861 days from the low to the current day. The prior cycle, 861 days, was at this top, getting ready for that collapse that happened in May, the following month. So we're not talking about that this is going to happen in May. We're just looking at this from a day count perspective. The low to this coming 30 days, which would take it from 861 to 891, that is the 30 days that is coming up. Last cycle, this is what it did. It ran up, very weak move to the upside, which was a lower swing top, and then it collapsed in May. Now, after that period, you had another couple of difficult months before it started going in at the end of the year. Now, this also is part of my view that I'll leave till the end in terms of this, quarter 2, 2025, and of course, that's going to end the first half of 2025 as well. So I'm going to come back to this in just a sec. The cycle prior, you got 861 days, came up to this area here. There's 861. The following 30 days from that count, there you go, roughly around here. So there's 33 days. It wasn't an easy period from day 861 to 891. And I hear what you're saying already. The last 60, 50 days hasn't been an easy period. How can we go through another 30 days? I'm not saying that it has to be exactly like this. It's just not a clear trend like all of that previous period leading up to that 860 odd days. So nice moves to the upside, but there are also some pretty severe corrections along the way. Now, this period after the 861 days was another significant correction, top to bottom, 40%. So we know through 2017, there are a lot of 40% moves, 30 to 40% moves. Even after that, leading into the final peak, there was another 40% correction. And then this final one here that lasted like 4 or 5 days, 30% correction. And so we've only seen the 30 odd percent correction so far. This one here being 31, and we're currently at about a 33% correction. Now, the forward returns table for April for BTC, this is probably going to be the big one that everyone comes back to over April to sprinkle a bit of hopium for everyone. 71.43%, making it the third best month for BTC. Tied first is February and October, 73%. However, I know you'd probably look back to this February, which was red. So it was a terrible February for BTC. And now March is going to be red. Here we go for April, 71% of a green. I don't think that's going to be enough to push Bitcoin to new fresh highs or even potentially break past the high of March's high. So there is March at 90, call it 95,000. However, we could see a green April that runs a little higher, puts in maybe a higher close, right? There's the open somewhere down here. And then it leads into that May-June period, which also looks, well, still is not looking very clean for the stock market. So that goes back to our forward returns, goes back to our predictive cycles here as well. It's not the cleanest in June, pretty difficult there with a couple of corrections. And then also after April gets going, another correction there. And as for Bitcoin's Aprils, well, it did say 71% green, but you can look back at the previous cycles. Last year was red after a pretty big move. You also had the market coming to a peak in April 2023. There was a correction in May into June then. You had the bear market, April was red. You had a peak, that was the all-time high at the time in 2021. Another couple of significant months down. And then you come all the way back to April 2020 after COVID, big bounce at the end of the month for March. And then April came back and gave you a green month. Then things started to slow down as they were grinding, consolidating before that next move. Now, I'm looking back 5 years here because this has been pretty much the most similar to what's gone on over the last 3 months, or 4 months actually. You got December 2019, red. So we had that red in 2024, then a green January, and then 2 significant red months, February, March. So I'm looking at this now thinking if the market is going to start following something a little more like 2020, then that could lead us to this final pump. And this is coming into my subjective opinion for April, Q2, and potentially the rest of this cycle into 2025. This is looking at the bull case only. The invalidation level clearly has got to be 62K. So I just need to give you that, the warnings, before I get into the Hopium, because there's always going to be an invalidation level. End of the day, no one knows what's going to happen after this point. So let's end it on a bit of Hopium after the warnings of how this market could start to break down. And I'll get into that in future videos should we see some breaks of 78. Anyway, 5-year look back, not a cycle, but just looking at the 5-year here, this has been the most similar in terms of the pattern. So if it does start to churn around for May, June, a little bit of a rise, July, August, pullback, September, and we have this final leg into the end of the peak, right? The final peak for this cycle, then that's probably the most similar I could see through any of the cycles prior. That also is a little similar to the final, well, the cycle of 2013, being that we've seen one significant pump, big pullback, consolidation, a second big pump, and we're in this potential consolidation. That's if it is still a bull market. And then we get that final last pump into the high. This is similar to Michael's theory on the 3-pump theory for this cycle. We've seen significant pumps here. Nice big one, another pump, and then maybe we get this final pump at the end. So that's my subjective view after I put together the data of the S&P 500, the real estate cycle, and of course BTC. The final thing I'll leave you with is ETH, which isn't looking as good as the rest of these charts. And the only way I could see this happening if the rest of the market's doing well, but ETH isn't, is if we get a bit of a washout next month in April, and that dumps ETH down to the $1,500 or even as bad as somewhere around $1,100 or $1,200, which would be an extension of this double top. You'd also see the ETH BTC chart continue to break down very, very poorly here, as it's already taken out the December 2020 low and coming towards the next lows of 2019 and 2020. And it could potentially go as far as the 2017 low, December 2016, January 2017, all the way back at 0.007. Now that would have to happen while Bitcoin is going up as well. And then you could potentially just see the ETH USD chart hover around and really not give you too many gains from that point. So maybe a dump through into April for ETH and then some sort of recovery, but but still a weaker recovery overall because ETH BTC is just not keeping pace. We haven't seen any volume come back in. There's no confirmation that this is going to be a low at this point, and you've already seen 3 down months and 4 red months. There's the red, and then of course the lower highs, lower lows. And that has only happened once in a bull market, but not this late in the game of the bull market. You can go back to 2017, 1 month down, couple months up, month and a half down, and then it boomed towards the end. But you've never seen 4 months this late in a cycle for ETH, which would leave me to believe that it might only get a bit of a weak rally up into some sort of 50% level at 2,500, maybe all the way back to this top here at some sort of $29-ish $100. There's just been so much hype lately that I've heard anyway about ETH and why it needs to be bought up and all sorts, and it just keeps putting in lower and lower lows. So I'm more tempted to fade all of the calls from, I don't know, I guess big influencers or anyone talking about ETH because the chart continues to go down, and those who have it continue to sell it in the face of, I guess, all of the hype from influencers. The toughest thing here is that there's still no confirmation that we're about to turn around yet, but on the flip side, we still haven't broken down from any key levels. So I think it's going to be a pretty tough one going into April and Q2. And if we see, I guess, what I've been discussing here, some of the positives, we start to see those play out, then I suspect we'll get a good close to Q2. Otherwise, we'll reassess, continue to discuss it on the channel. Like, subscribe. I'll see you guys back here at the next video. Thanks again for hanging out with me for another big Monday monthly update. Catch you at the next one. Cheers.